following content is an update and technical analysis on the Nasdaq 100 futures, the largest component to the technology sector and non-financials here off the daily interval. And it is an extraordinary rarity for me to engage in an examination of a technical analysis pertaining to a prominent index or vast composite ETFs of indices across the board. Very rationale underlying this preference lies in the intricacies of my trading strategy, wherein I uncover singular individual stocks boasting fundamental catalysts that exhibit remarkable easier pace of prediction. In contrast, an entire index such as the Nasdaq 100 is constituted by a substantial basket of 100 individual stocks susceptible to sudden and volatile moves really in either direction. Therefore, behind my decision to delve into this realm stems from my belief that we have reached a significant turning point. In the past, I had successfully executed a short, rather large short position during the preceding market crash of 2021, going into 2022, specifically focusing on QQQ, the largest component of the Nasdaq. By carefully scrutinizing macroeconomic data and pivotal indicators through a thorough technical analysis of the underlying conditions at that time. And we were successful in a pretty substantial drop here to the downside. And again, I have, just a rarity when I do trade it, but we are at a key inflection point, in my opinion, off the 786 Fibonacci retracement, call it 15,445.98. I have this right at the bottom of this key primary trading range, and we've tapped that. We've tapped that level there, which could offer in what you would call an aggressive short trade position size with some stops above here. And again, I certainly believe that a potential pullback could ensue here. But we have what we have now is a primary parabolic primary trend line, really off the September reactionary lows of 2022, multiple key reactionary lows to help validate that inflection point. And this is a big one, in my opinion. I believe if we snap that level, it will really be compared to an all-out blow-off top. It has gone in a parabolic state to the upside with the artificial intelligence catalyst and strength of just blowout earnings out of Apple and a lot of the big FANG stocks coming out of this sector here. Just an everlasting market blast to the upside. And usually you have certain pullbacks within that realm. And again, bull traders, long traders, they're starting to blow out a lot of these negative and bearish divergences on multiple indicators here. As bad as the macroeconomic data, as bad as some of the headlines coming across, you cannot discount a possibility that we march right back into new all-time highs. And I believe this key inflection point is what's going to do it here. If you effectively, bull traders, long traders, they want to see a nice breakout above there, right back into that key trading range, and maybe have a more consolidation phase here, and potentially a move right back up, challenging those previous reactionary highs from 2021, and then ultimately taking them out for a big move to the upside with no resistance up above there. And that would be exceedingly bullish with no resistance and just a potential steady march to the upside in this renewed new bull market. As wild and as crazy as that may sound, bear traders, short sellers, they want to see a pullback here. They want to see a complete pullback here. And then they want to ultimately potentially see maybe even a potential false breakout back into the primary trading range, putting in some sort of a near-term divergent high, negative and or bearish divergence, and then they want to see a complete big red candle solid close below that primary parabolic trend line there, issuing a daily candle close sell signal for a much larger drop to the downside. I have this key 14,439.97 price support here, big support in my opinion, which correlates with the 618 fibs retracement, multiple reactionary highs, reactionary lows to strengthen its validation. Call it a multi-year inflection point. That's exactly where long-term traders want to defend that key level at all costs. If we're in a renewed bull market, so you could have some sort of a uptrend continue with a healthy, still continued momentum indicators across the board there. And a renewed to the downside. Bear traders, short sellers, they want to see this completely go here where you have the 50-day moving average hovering in up above that 13,993.17 price support, and bull traders want to see that taken out. They want to see that go. They want to see a complete snapping of that 50-day moving average with that key support there. And then a re-challenging at the top of the trough of July 2022 there, which is the 50% fibs retracement, call it 13,628 there. And that would be extremely bearish if we take that inflection point out. We take that out, you're going to see news, media outlets, pundits begin talking about a potential renewed bear market and a lot of bad economic data. We already have bad economic data. There's 4 horsemen to a recession. Within the PMI manufacturing data is in contraction. An inverted yield curve that's never seen an inversion a cycle of these lows in history. Third, with a credit crunch, and fourth, ultimately, is the labor market. And the labor market again is very overwhelmingly mixed. You have labor market conditions potentially starting to crack. You still have a lower unemployment rate. There's damage occurring in the labor market when you have real wages completely collapsing off of a cliff, whereas nominal wages are going up, but real wages are falling off a cliff. Again, the labor market goes. I believe that's it. You're going to hear a whole ton of recessionary talk. But again, I'm here for the technical analysis perspective here. And again, this would be a massive head and shoulder looking top here, whereas you have your 2 right shoulders here, massive head to the upside, blow off top, and then a potential strong move to the downside. Parabolic primary trend lines usually end in a major disaster once recognized. They're a catch-all, catch the bull traders, dip buyers, long-term investors. That is the ultimate bull trap, is within a parabola that never looks like it's going to end, ultimately trapping many inside of a wicked blast to the upside like in this nature. And again, it would go down really, really quickly. And then you'll have a potential head and shoulder looking top here, whereas you have a neckline right at the 382 fibs retracement, multiple reactionary lows and highs to help strengthen that invalidation. Call that the mother of all levels, in my opinion, for the Nasdaq as of now, 12,899.76. And if that goes, that'll be the neckline, ultimately taking out the 200-day moving average, and then a waterfall selling stops to go off. Just a huge market crash to the downside if and when that happens. So again, just at a key inflection point, it would be an aggressive short trade setup here up on the top. And I'll zoom in to the inner workings of the hourly moving intervals realm here. Ultra zoomed in now, whereas we have nice clean Fibonacci retracement levels. Off this clean, we have negative and bearish divergences that have really constructed pretty largely on all 3 technical momentum indicators here, in the RSI, moving average convergence, and the oscillator histogram with a huge divergent high, rising bearish wedge pattern, multiple reactionary highs to strengthen that invalidation, with a minor uptrend line off the 8th of June, reactionary lows there. Bear traders, short sellers, they want to see a solid hourly candle close below there and a potential snapback rally for a large move to the downside, whereas you'd have that first target there, the 236 fibs retracement, call it 15,022.22, price support there for a 1.6% drop, down to the 382 fibs retracement, call it the top of gap support, 14,741.35, price support for a 3.4% drop, down to the 50% fibs retracement, 14,514.31 for a 4.93, call it a 5% drop, down to the primary reactionary high, reactionary uptrend line there off the late April reactionary lows there for a 7% crash, call it darn near 6.5% crash, which is 618 fibs retracement. If we take that out, we take out this nice clean, again, primary reactionary low trend line there, multiple reactionary lows. And if we take that out, put in a solid hourly candle close below that, that would issue a secondary sell signal, in my opinion, on a much larger drop to the 3,964.786 price support there. So we'll see what happens. Confirmed negative bearish divergences, crossovers there on the moving average convergence. And again, it'll be a snap below that will start to damage these key technical momentum indicators and an undercutting of the 0 line thresholds for a bigger, much larger move to the downside. I'll keep you updated if I see any more significance here on the charts.